Investments in the securities market are subject to market risks. Read all the related documents carefully before investing.
Hello, Brian. Hello. Good evening from India. How are you doing?
Doing great, Vivek. Good morning from the East Coast of the United States.
Lovely, lovely. So, I just talked to my audience and I mentioned that Brian is one person. If you are there on Twitter, you cannot avoid him because he's there on Twitter all the time. His content is such amazing content, and many Twitter handlers actually take reference from his content and share in Twitter. So, Brian, I'm so excited to have you on this platform, and I'm going to retrieve as much as possible from you. Trust me.
That sounds like a plan. Thank you for the kind words. Yeah, I'm a hyperactive Twitter user and have been for about 5 years now.
Yeah, and it's such a lovely platform it is, right? I just love it, the fact that we are able to connect with each other and talk. It's like one big family we all are part of, and we feel so comfortable talking to each other because of Twitter.
It's amazing what you can learn on any social media platform, Twitter included, if you learn to follow and connect with the right people. There's plenty of garbage on all of the platforms, don't get me wrong, and Twitter is not an exception. However, if you curate your feed the right way, it's an amazing resource.
Lovely, lovely it is. So, Brian, I just had a brief introduction with you, but obviously I want my Indian audience also to know more about you. So a brief background about you. How did you start it? Where are you right now? What kind of returns you have generated? I heard good numbers from you. So I want you to probably repeat what we discussed a few minutes ago.
Sure thing. So I started investing for the first time in 2004. I was fresh out of college, and despite graduating with a degree in business, I was essentially financially illiterate. Yes, we studied marketing and the basics of accounting and all kinds of classes like that related to business, but I didn't take a single class about personal finance or about what the stock market is or building wealth. None of that. So I was as green or as inexperienced as you could possibly be. However, when I graduated, my dad handed me a copy of a book that was very popular at the time called Rich Dad, Poor Dad by Robert Kiyosaki. It's gone on to become a mega bestseller. And I devoured that book in about 48 hours. It was the first time that the concepts had ever been shared with me. The idea that the rich think about money differently than the poor and the middle class. Everybody is in business for themselves. The rich buy assets with their capital. The poor and middle class buy liabilities. Very simple concepts, but they just blew my mind when I first heard them. So from there, I decided to start investing the little bit of salary that I have into assets. I thought about commodities. I thought about real estate. I thought about bonds. And then I ultimately decided that the stock market was the best fit for my personality and life circumstances.
Wow.
So I started buying individual stocks in 2004. I was buying garbage companies. I was buying penny stocks. I had no idea what I was doing. I thought that investing was you buy a stock for $1 and you sell that stock for $1.20 later that same day. I had no idea about really anything related to business and fundamental analysis. However, I was bit by the investing bug and I started to read as much information as I can. And then over the last, ever since then, so for the last 20 years now, I've been gradually honing my style and learning from the investing greats like Warren Buffett, like Charlie Munger, like Seth Klarman. And I would say that I really honed my current investing style in about 2012. So it took a couple of years. And just to give people an idea of returns, since 2012, when my current system was really established, my whole portfolio is up 520%. By comparison, the S&P 500 is up 380%. And my style is largely buy and hold high quality businesses for a long period of time. So I'm not a trader, I'm an investor.
Lovely, lovely. So, this video is going to be very, very useful for a younger audience who want to lay a solid foundation of their investing journey. One very interesting point, Brian, you mentioned is that you realized your style. And I want to spend some time on this because I think this is the toughest stage of investor journey, to know who you are. So how do you objectively define that this is what I am and ideally I should do this to be very successful in stock market?
There's no right or wrong way to invest. There's tons of different styles that you can pursue. Some people pursue income investing. Some people pursue growth investing. Some people are value investors. Some people are swing traders, right? There's tons of different styles out there. So when people debate about what style is best, that's just people expressing different opinions to each other that have fundamentally different of principles in place. So I discovered that the best investing style for me was to front load as much of the research that I possibly can. So have a very tight filter around getting stocks into my portfolio. However, once a stock enters my portfolio, I am an extremely reluctant seller. That's for a number of reasons. First off, if I did the work properly up front, it can take years for the market or for the company to fulfill the thesis that I initially had for it, and for the market to recognize the thing. And there can be all kinds of reasons where those two things diverge, especially over a short period of time. Secondly, it takes a lot of mental energy and time for me to vet a stock, vet an investment properly. And when you sell that stock, you're essentially throwing away all of that past research and work that you did. Third, while I have a decent track record of identifying winning in investments, it's very similar to the same statistic that you would have going up to the plate in a baseball game. You're correct. You actually find a winning stock about 4 out of 5 in 10. And I don't know which stocks are going to be winners. I can only figure that out with the benefit of hindsight. And the worst investing mistake I've ever made by far has been selling great companies early. I bought a great company. I had the capital there. I got antsy. I sold that stock, and then that stock went on to go up 10, 20, or even in some cases 50x. So that single mistake, selling a future mega winner early, dwarfs all other investing mistakes I've ever made combined. So because of that, my style is front load the research, use a highly detailed investing checklist to find winning investments, buy those companies, and then hold them voraciously.